Do you want to get an SBA loan? By that I mean, do you want to get the longest term, the lowest rate, and get the most money with the cheapest payment? Well, if so, you need to know about the 5 criteria that you're going to need to meet to be able to get an SBA loan. Hey, by the way, it's easier than you think it is. And in this training, I'm about to decode the exact 5 things you need to know to be able to get the longest term, the lowest rate from SBA. We got a lot to cover, so let's dive in. So let's get started with why you'd even need an SBA loan. Look, there's a lot of different types of financing that's out there available for your business. But SBA loans are really the trophy, the epitome of what we want to accomplish in financing for really a couple reasons. First of all, they give us the longest term, and this is a really big deal. A lot of financing out there requires us to pay it back within 12 to 36 months. But SBA loan goes as long as 20 to 30 years. So this means we can get a lot more money with a lot cheaper payment. And that's the second part of SBA loans. The interest rates are very low compared to a lot of other financing that's out there. Look, a lot of alternative lending can charge us 20, 30% interest rates or more, whereas SBA loans are commonly 8% or less, even as low as sometimes 4 or 5%. So let me give you an example of why this matters. The very first loan we ever got at Credit Suite for our business was a $75,000 loan. And this $75,000 loan had a payment over $9,000 because the term was so short. Then we went and got an SBA loan, and we got $325,000 in funding, and we were able to keep our payments less than $4,500 a month. That's right. We were able to get considerably more financing, over $200,000 plus more in financing, and keep our payments half of what it was when we got the first $75,000 loan. That's why we want SBA loans. We want to borrow $325,000 with a $4,000 a month payment, not borrow $75,000 with a $9,000 a month payment. So this is why we want SBA loans, low rates and long terms. Now the question is how do we get them? Well, there's 5 things that you need to know to be able to get approved. First, they're going to want to know what you're using the loan for. Unlike a lot of financing you can get where you don't have to map out exactly what you're going to use the funds for, with a typical SBA 7A loan, which is like a working capital loan that you're probably going to be applying for, they want to know what you're using the money for. So you should have a plan mapped out in detail of exactly what you're going to use the funds for. Lenders are going to ask this question, and they're going to want to make sure that you're actually using the money to invest in the business, preferably in ways that will actually grow the business and grow the revenue. Look, the primary concern anybody that lends you money has is whether you're going to pay them back. So if you show a plan to be able to put the money into the business in a way where it's going to grow your revenue, that's what they're really wanting to see. So make sure you know exactly what your funds are going to be used for and map it out. Make sure that some of those funds usage actually has growth of the business. That's what lenders are going to want to see. Second, they're going to want to see your revenue. Now, there is a myth, and sometimes I speak about this as well, that you must have 3 years of tax returns to get an SBA loan, and it is oftentimes true. About 9 out of 10 SBA lenders out there are going to require that you've got 3 years of tax returns to even get approved. So this means you have to be in business, a well-established business. You have to have revenues. You should even have profits in order to get approved. But what a lot of people don't know is there's even startup SBA loans that can work for you as well. Even if your business doesn't have the revenue, but you have strong personal financials, it sometimes is enough if you meet all 5 of these criteria to get approved. So the key is, do you have the money to pay back the loan? If the business can prove that through bank statements and tax returns, you're good. But if the business can't, or the business is just getting launched, that's when personal financials need to be strong to carry you through. Whether it's the personal financials on a newer business or the tax returns on an established business, the bottom line is you need to show you have the revenue and the profits to be able to pay back the loan. It's the primary concern the lender has, and it's what's going to determine whether they're going to approve you or not. Which brings me to 3. The third criteria you're going to need to meet is credit. You're going to need to credit qualify. Now, oftentimes your credit needs to be really good to qualify for SBA loans because, again, your credit reflects your past history of paying back debtors, right? If their primary concern is getting paid back, the best way to figure out if you're going to pay them back is to look at how you've paid back other loans, credit lines, and credit cards that you've had. So what you need to do here is 2 things. You need to make sure your personal credit is as strong as possible. Look, if you have a ding here here, a ding there, it may be okay, but those dings can't be on major accounts. Like if you've got recent late payments on Bank of America loans, you're in trouble. So you need to make sure that your credit is cleaned up and that it reflects that you have a history of paying back your debts, especially accounts through major conventional banks like Bank of America and Chase. You also should establish your business credit. Now again, it's actually possible to get newer financing for SBA for newer businesses without having established business credit. But you have to have really super strong financials to pull that off. In most cases, lenders are going to want to see that your business has established some business credit. And this is because lenders, in order to approve you for SBA loans, have to have a 140 score through a score known as FICO SBSS. Look, it's FICO's small business score. And the only way you can get that score is to make sure you have some business credit established. So if you're going to get an SBA loan, you need to work on building some initial business credit and cleaning up your consumer credit, because that's going to be needed as the third criteria in order to get approved. And the fourth criteria is collateral. Look, SBA requires its lenders to take every asset it can as collateral for the debt. Now, you sometimes can get around personal assets being supplied if your business itself has a lot of assets. So if I accept payments on terms for my customers, I have $1 million in account receivables, but I'm only borrowing $300,000 from SBA, well, then there's a good chance that I'm able to get approved without collateralizing my home. But if I'm just starting a business and I don't have business assets, then they may need to collateralize my home. So the key is they're going to want assets served up as collateral. It could be account receivables, it could be stocks, bonds, 401ks, IRAs, your personal home, it could be commercial real estate, but you're going to have collateral oftentimes equal to the amount of money that you're borrowing. So you want to start thinking about what assets in the business or as an individual you're going to pledge as collateral, because it's going to be needed to get approved for SBA loans. And the fifth criteria kind of involves a couple things. First of all, you need to really have experience in the industry that you're looking for the loan in if you're trying to get an SBA loan. If you're just getting a new loan to launch a business, they're going to want to make sure you have experience in that industry before they lend to you. If you already have an existing business, well, then obviously you already have the experience in that business to begin with. The other thing is you're going to have to pass the actual background check. And what I mean by that is any misdemeanor, any felony, anything like that you've had in your life is going to come up and need to be explained. Now, the easiest way to know what they're going to find is pull your LexisNexis credit report. Almost all SBA lenders are using LexisNexis to find things like what licenses have been issued to you, what licenses have been revoked, what speeding tickets do you have, what misdemeanors, what felonies do you have. Any other concerning background information is found on that LexisNexis credit report. So I highly advise you to go get your LexisNexis credit report, review what's on there, and then clean that up before you even think of applying for SBA loans. Now, if you've done this, then now you meet the 5 criteria that you're going to need to meet to qualify for SBA financing. But the great news is, even if you don't meet all these 5 criteria, there's a lot of alternative financing that can still work for you right now. You can get financing just based on your revenue. You can get no-doc financing as a startup. You can get financing just based on you having an asset that you can serve up as collateral, and that doesn't even require personal guarantees. You can even get business credit, none of which requires all 5 of these things. So there's plenty of other options that if you want to get approved for an SBA loan or get approved for alternative financing, then make sure you check the link in this description to grab our guide on 27 ways to get money to grow your business. That'll give you access to a lot of alternative sources and give you information on SBA financing as well. And also in the link in this description, make sure you actually get our free finance assessment. You can get this at creditsuite.com/consult. You can also give us a call at 877-600-2487. On this assessment, we'll make sure your business is structured correctly, your fundable foundation is built the right way to get maximum funding for your business. We'll give you tips and tactics to build your business credit. If you have some established now, we even get your reports at no cost and review those with you. And we'll do a finance assessment to talk to you about qualifying for SBA and all the other financing that you're able to get that's way easier to qualify for as well. All of that happens by checking the link in this description. Make sure you check it out right now. And if you got value from this training, make sure you like and subscribe and keep your eye out for our next training. We're talking about more cool ways to get the money you need to start and grow your business.